They don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get in the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful and talented co-host.
Hello, JD. How are you?
So I'm doing all right. How are you?
Great, thanks.
Awesome. Well, we're super excited to bring you guys a pretty phenomenal person. We got a military veteran, real estate entrepreneur. He is the managing principal of H&K Investment Group, Charlie Hardage. Thanks for coming on the show today.
JD, Melissa, thank you so much for having me. I'm really honored to be here. Thank you.
Awesome. Well, Charlie, for some of our audience who maybe don't know who you are or haven't heard your story, can you kind of give us a rundown of where you came from, how you got into investing, and then we'll take the show from there.
Yeah, it sounds great. So I'm currently based in Nashville, Tennessee, not too far from where you're located. I just quick background, I'm from Dallas originally. I grew up middle-class mindset. Rich dad, poor dad really opened my eyes, probably most investors out there. And I knew I didn't want to go W-2, which is what I was taught, and what I think a lot of people are taught. And so I read Rich Dad, Poor Dad on my second deployment. I was shot in the neck in Afghanistan. And I had joined the military as a career. It wasn't just a couple year thing and great GI Bill. I wanted to make that a career because I had already worked in the IT world, in the corporate world for a couple years, and life had other desires for me. And so, as I saw myself getting out of the military, which was what I wanted to do, I went back to the IT world in the corporate space because that's what I knew. And I didn't know what type of real estate I wanted to be in. But after listening to tons of podcasts and reading and learning and talking to people, multifamily syndication was just so impactful for me that's the route I took. So yeah, a little bit about me.
Sure. It's what year was it that you were on your second deployment reading Rich Dad, Poor Dad?
2012. And yeah.
Okay.
I had my wife send over probably 8 books, took a month or so to get over to me, and just read as much as I could, just consumed as much as I could.
Yeah, I understand that. I actually read Rich Dad, Poor Dad for the first time on my second deployment. And on that deployment, I read more books on that second deployment than I had the entire time I was in high school or anything before that. Now, that was a couple of years before yours, but that is funny how sometimes when there's nothing better to do, you read and it can change the course of your life. Now, obviously, there were some other incidents that really affected where your life and the direction of it went. And one of the things that we're super interested in hearing from you is, how did you make that transition from being in the military, obviously dealing with getting better after being injured, but going from here's my steady paycheck to now I'm building my business and investing in real estate and all of that kind of stuff?
Wow. Well, in the military, I couldn't stay, so I was forced to do something else. I actually did get my real estate license when I first moved back to Nashville, and quite frankly, didn't really enjoy it because I had a daughter who was she was 1.5, and Melissa, as you know very well, a lot of times it's nights and weekends when you're showing property, and there's a lot of emotions with that, and that's great, but that's not me. And so I went back to the steady paycheck of a corporate job in a W-2 in IT. And as I was as I was there, I was trying to help and, just learn and get better and improve the team, and got demoted. So that was fun. And so so it was a lot of kind of red flags, or maybe not red flags, orange flags that, I'm contributing so much to this company and to this team, or at least I thought so. And instead of saying, here's a raise or a promotion, here's a demotion. And so I think that at that point I was still learning about real estate, but I was like, man, I know I don't want to do this forever. I got to figure out what else is out there. I got to figure out how to do it. I just didn't know how. And I think as I kept learning more and more, and then, going to different job and different experience, but similar. And I was just like, I got to do something, because right now what I'm doing is not working. I don't want to work for someone else forever. I want that time and financial freedom. And real estate was a passion for me. I just didn't know what type of niche I wanted to get in to with real estate.
Well, you found your way to multifamily syndication, but what was it about the syndication or running syndication that drew you to that?
Yeah, I love this question, because I was so impacted. If you were to talk to a new investor, say, hey, I have a way that you can invest. No, you don't need experience. You don't need to visit the property. You don't need to take calls from tenants or anything like that. Would you believe me? No, probably not. And so I thought it was a scam when I first heard about how I could passively invest into apartment complexes with an experienced team doing all the work, and I still get some benefits and rewards from that. But as I started learning more about it, I was like, wow, this is actually real. This is not a scam. I just never heard of it. The only passive investments I had heard about was 401k and IRAs, because single family is not extremely passive. It can be somewhat passive, but it's not passive. And so for me, I was just so impacted, because I didn't want to only do 401k IRA, because that's what I was taught, but wanted to get in and buy some income generating assets like real estate. And so the fact that I didn't have to be an expert, I didn't have to visit the property, I could invest out of state by handing someone money, and they, we pool our money together and buy the property. I was just so touched and impacted by that. I just felt like I had to jump into it. And so I invested in one deal. 2 days later, invested into another deal. And I remember after that very first wire, I just kind of I got home from the bank, and I was just like, oh my gosh, I feel so good. I feel so relieved, because now I feel that my goals, my dreams, the future for my family, and this legacy that I want to leave and our family wants to leave, our clock has now started. And I had never felt that way before. And so I just felt like kind of like this rush over me of like, oh my gosh, I'm nervous, but I'm so happy that I did it, and on to bigger and better things. Right. And so I did get, learned a lot more about it, got into the active side, and now helping other people invest passively.
Awesome. That's great. One thing that I'll say is investing in single family properties is not passive. Investing in single family portfolios, totally passive, very similar to your syndications. The more units you get, the more passive it can be, or really it needs to be. One person can only manage so many things before they need to get help. When you start off on the big end, you're just getting that help put in place, and the deal can sustain it. So now, you went from the military, a kind of a rough transition out into the IT world, where you thought you were doing a great job, and the bosses said, hey, I don't think you're doing that great a job, or there could have been other reasons for being demoted. One of the things that I see a lot, especially with real estate entrepreneurs, is the way that your mind works makes you a really good entrepreneur, a really good business owner, makes you a really horrible employee, because you want to jump out of your lane to fix other problems, and you have good ideas, and if somebody would just implement them, they'd be great. That doesn't always work for a W-2 job, but it makes for a good business mindset. So now you've transitioned away from that, and you started getting into syndications, and now today that's what you are doing pretty much full time. So what does your actual business look like? The H&K Investment Group. Tell me about what some of the roles and positions are within inside of that company and how you guys are operating and working on the day to day.
Think about any hat you can wear in a business, and that's my partner and I pretty much. But so I underwrite. I like spreadsheets. Even when I was in sales, I use spreadsheets a lot. So I'm feel comfortable, confident with spreadsheets and analyzing deals to begin with. I've always kind of been strategic and analytical anyway, and so I like coming up with business plans. Making sure a deal looks good. If it looks good, how can we increase the value of the property, both from a tenant and resident perspective? What amenities can we offer? How can we reduce cost, and how can we increase income? So I like that perspective just from the underwriting and business plan. But then when it comes to actually our business, we have to wear so many hats. In the IT world, I was able to, our marketing teams worked with all these different SaaS products, social media scheduling and podcast and video editing, all that stuff. And so I was familiar with a ton of different types of platforms. I just never did it myself. Mm-hmm. So I'm, at least from that perspective, I'm able to kind of get a little bit of a leg up, because I know instead of having to do all this research, I'm able to, quickly find the tool. However, the learning curve is, can be kind of steep sometimes. And so it's been a very long and probably slower process than I would like. I was never big on social media before, kind of disliked it, but it can be so powerful, because if I'm talking, take this podcast, for example, I'm not able to fit all of what I want to convey or what I think is helpful in one post. But if someone sees a video like this, then they could hear what I'm talking about, what you're talking about, and how it could help. And so maybe there's like a buzzword or a keyword that someone kind of latches onto and is like, oh my gosh, and it resonates with them. And so I think just kind of getting out of my shell of, and a lot of our shells hiding behind a computer and just typing on social media really helps from a marketing standpoint as well. So there's just so many different hats to wear all the time. And sometimes, it's like, well, shoot, I got 10 hats I have to wear today. Which one's the most important? Right. I think that's the hardest part for me.
We definitely understand that. Well, so is it just you and your partner, and you guys are running this together? You don't have virtual assistants, you don't have admin assistants. What does your actual team look like?
Yeah, we actually do have 2 virtual assistants right now. They are helping with PR, eventually, and they're newly hired. Eventually, what we would like to do is hire a VA to do more of the digital marketing. Mm-hmm. I think my partner and I have great ideas. Maybe they're terrible, but we think they're great ideas.
Sure.
But the implementation of them is very time consuming. Mm-hmm. I have a podcast. Eventually want to hire someone to help not only schedule guests, but edit the podcast as well. So I think we wanted to check out the virtual assistants first, and then kind of go from there and see, like, what did we do wrong? What did we do right? And make sure that we don't make the same mistakes again. But I definitely truly believe in the power of delegation and teamwork, and not only that, but you're creating jobs as well, which I've always wanted to create jobs and give back, because it's stuff I can do, but there's other people that can do it a lot better, a lot more efficiently too.
Sure. And I think, a lot of the things that you're facing with that, and the way that you're thinking about it, is the same way that we think about a lot of the things in our business. Mm-hmm. And one of the best things that we learned or took away from a mastermind, we're in a couple of different higher level masterminds, and what they did is they broke out this giant list of tasks, and it's all the tasks that every single real estate investment company has to do, and it assigned dollar values to each of them. Yeah. And if you're going to pay a VA or an employee, somewhere between $5 and $20 to do these minimum wage type tasks, that frees you up to do the income generating activities. Coming on the podcast, marketing yourself. For you, it would be, raising private funds, right? That's with a syndication, you're spending a lot of time, effort, energy, raising private funds, putting together your presentations, stuff that you can't really outsource because you're that is your bread and butter. Giving away all that other stuff and training a VA to do it is, one, it frees up your time and your stress level because you're not having to wear all those hats. And I think that's huge. But that's one thing to say that, but then to actually do it and implement it, the one thing that's helped us is getting everything that you do in your business, you have a process for it, process documenting it. And even if that means doing a video and having the VA write it down so that if that VA quits or gets fired, the next VA just reads the list and does the task. That's been huge for us. And not just VAs, but our in-office help too.
I would also say, JD, that they're better at it than I am. And I think part of that is I get so distracted by, I got 10 hats to wear, so I'm going to wear this. Oh, I need to put a different hat on right now. And if that's their one focus or two focuses, they're able to do that. Not only is it, saves my time and stress, but they're laser focused on it. And so that's actually, to me, just as powerful as, me being freed up to do something else as well.
Sure. I agree with that 100%. Well, okay. So now when we're talking about your syndication business, there's a couple of different parts as I see it, and go ahead and help clarify if I don't have it right. But you do have the raising the funds. You have the identifying and acquisition of the property, and then you have the management. I'm sure there's a million other tasks in there. Are you guys sourcing property management? Are you actively managing your property managers? Are you finding the deals yourself or partnering with other people to bring the deals? And then who's in charge of raising money?
Yeah, it's kind of all of the above / depends on each deal. I only look I primarily look in Tennessee, middle to eastern Tennessee, and then also looking in a couple markets within a 3-hour drive of me. So that would be Atlanta, a couple markets in Alabama, and then Louisville, Kentucky.
Sure.
However, at the same time, even though I focus on the underwriting piece, my partner's on the capital raising piece, but we're still helping out where we can. Don't necessarily have a ton of experience with the asset management side, and that's kind of like the project management side of running the property. I'm extremely unorganized as a person, and there's better people that handle kind of the day-to-day, week-to-week. I'm still on all those calls because I want to know what's going on. I want to be able to help my investor or talk to my investors about what's going on, and not just say, oh, here's an email, read that. But then there's also times, in these calls where I do speak up and say, hey, what if we tried this? Just kind of getting an outsider's perspective. So we only focus on what our strengths are. Our strengths are not asset management from my partner and I, but we do partner with other people like us, other, small businesses like us that are able to pick up where we're terrible at, and maybe they're not great at underwriting, and that's kind of where we come in. So it does depend, but we've helped raise capital for deals. We've helped give market overview for deals. We've underwritten deals from start to where we are now. But the big piece is right now, I don't trust us to do asset management. And we've partnered, one of our teammates who's not really a part of the company, but we partner with her. She's done project management for Fortune 500 companies for 20 years. So she can do it, but yeah, we partner with experts where we're not great at.
Yeah, absolutely. And that's the same thing that people in regular everyday business, the Ford Motor Company hires expert engineers and hires these other people to fill the gaps that they don't. Okay, so now in regards to running your numbers, what is your everyone runs their numbers different, and you can come up with an NOI a million different ways, but what is your buying criteria? What are the kind of assets that you're looking for? How big? What's the cost? Are you buying at a certain cap rate? Are you looking to, buy these assets that you can turn around over the next 5 years and then sell them for a profit? What is your guys' actual investing strategy?
Yeah, so the first 5 deals that we've done are 5-year hold, and the goal is to double investors' money in 5 years or less. And those are kind of a fix and flip. Over the last year and a half or so, when I talk to my investors, a lot of them aren't necessarily looking to double their money in 5 years. They're looking for a longer term hold now. They're either in their later stages looking for retirement, or they're not in the building wealth stage. And so what I would like to do over the next couple of years is to get a property where we can fix it up, and then, like a Burr method, do a cash out refinance, but then hold on to it, where we get investors their money back 3 to 5 years, and then we hold it for 10 years and get a 15-20% cash return. As far as the criteria, looking at, we had been looking at about 80 units and up. Depending if it is local to me and I know the market very well, I think we'd go as low as about 40 or 50 units. Typically are looking for a B or C class. That being said, if it is an A class, there still could be some meat on that bone, because there's, a lot of times the developer buys it. They don't operate it. They get heads and beds ASAP, and rent is maybe 70-80% of what the market rent should be. And they may put a couple amenities in there, but they don't put too many amenities. So then we could go in there and get a brand new asset with very, very minimal CapEx that needs to be done, add a few amenities, and then have a nice A-class luxury property. And it would be more of an operational lift than a CapEx lift.
Sure.
So I'm not opposed to A-class, but we don't really target those unless it's just brand new,
Sure.
and we get it directly from the developer.
Yeah, that makes a lot of sense to me. Essentially, you guys are looking for ways to exploit the market or fit in places where other investors don't see the value or don't have the experience or the ideas to move it forward.
Yeah.
Now, if some of our audience wanted to find either more about what you're doing over at the H&K Investment Group, wanted to find out more about how you guys are running syndications, or just reach out and contact you, where should we send them?
Yeah, the best place is our website, hkigllc.com. I'm on LinkedIn, Charlie Hardage. I am on Facebook, Charles Hardage III. And then I also do have a podcast called Passive Investors Playbook.
And as far as Passive Investors Playbook, can you give us a brief, hey, what are you guys doing over there? What are you talking about? What should our listeners expect if they hopped over to take a listen?
Yeah. The reason that I started this podcast, like I said, I was so impacted by multifamily syndication and being able to passively invest in real estate that I just kind of wanted to get the word out as much as I could. So I sit down with successful people, doctors, lawyers, engineers, et cetera, that then got into real estate, and talk to them about why real estate as opposed to a franchise or something else. And they tell their story of how they got into real estate, and why they think it's so beneficial and to help other people build and grow wealth. So honestly, it's meant we don't really get into the weeds of a lot of terms and acronyms, because a lot of my friends and colleagues from the corporate space don't know, what cash on cash may be, or what a cap rate necessarily is. And so just try to break it down and in English, I guess, and not in real estate terms. And, had some really good feedback. Just, this is awesome. And it is kind of basic. So maybe your listeners, they're like, yeah, it's too basic, but, it's been helpful to several people at least. So.
Awesome. Well, we're really excited. We thank you so much for coming on the show today. And we do thank you for your service too. That doesn't go unnoticed.
Don't forget, if you like what you heard today.
Oh, yeah. And if you like what you heard today, after you go check out the Passive Investors Playbook podcast, make sure you like and review our podcast, share it with your friends. We're trying to get more listeners, and every review helps. So
For sure.
we appreciate it.
Thank you. Thank you.
Thanks, Melissa. Thanks, JD.
Thank you.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.